Welcome to The Mortgage Voice with Jeff Barton, your voice in the mortgage industry. Each week on this program, Jeff and his guests share their expertise, personal anecdotes, and the latest industry news to keep you in the loop. Now, to provide you with insight and help you navigate the consistently changing world of real estate lending, here is your host for The Mortgage Voice, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. 888-713-2929. That's our telephone number. Pick up the phone and give us a call. We do talk about mortgages all day long on the show. And thanks very much for once again tuning in and listening to what we have to say. Lots of things happening in the mortgage industry. There's a lot of changes taking place, both because of the lack of inventory in housing and also there's no refi market. So what's happening to the lenders and how that affects you and whether you have as much choice today as you did last week is all augmented by the fact that a lot of programs that are out there in the marketplace right now are new, are sort of exciting, or hearkening back to the dark days of the recession or pre-recession when we had things called subprime mortgages. Well, those products are a lot of them are coming back. And is that good or bad for the industry, or is it just something by which it's a Band-Aid to try to get more loans in? All these questions are very, very important. I wanted to talk first and foremost about 9/11. It's the week of 9/11. And wanted to talk about where you were heading, what I was doing at the time, and to bring Daryl on as well, just to talk a little bit about it. You know, Daryl, when I was back in 2001, the day that the planes crashed into the World Trade Center, I was at an office. I had an office on the Pacific Coast Highway out in Malibu at the time, and I was I think of a lot of people who were kind of in shock at the time, not because I was upset about the planes crashing into the World Trade Center, but because nothing was working. I couldn't get anybody on the phone. I couldn't contact a bank. It just seemed like my world was being interrupted, but not understanding the full force of what had happened. It took a week or 2 weeks before it really sunk in. How about you?
Well, when the event actually occurred, I don't think anybody immediately knew the impact of what had happened. I mean, the buildings hadn't really fell.
Right.
At this point, they showed some smoke coming out of some of the top floors. And I was here in Ventura. It was like 6 in the morning, 6:15, and I was running an aerospace company in Camarillo, and one of my senior staff called me on my cell phone at 6 o'clock. Well, very rarely did I get calls at 6 o'clock in the morning from my staff, so I knew it must have been something out of the ordinary, and he was at a loss for words, and all he really could, really get out was, turn on the TV, right, and see what's going on. And I did turn on the TV, and, to really understand the impact took several hours for things to unfold to find out what was really happening. But certainly shocking as the day rolled out and the weeks where it became obvious that it was a terrorist attack became apparent.
At the time and of the moment, we watched the second tower fall. Right, we were at home. But before that, like you, I got a telephone call, and we got a call from somebody who was friends of ours, but who also had kids the same age as our kids. And I happened to pick up the phone, and I don't know why I was home at the time, but I said hello, and it was a good friend from Westlake, and they said, hey, you know what? You got to turn on the TV right now. Are you watching TV? And I said some snarky comment. I forget exactly but it wasn't nice. Okay. And I hung up the phone, and I turned on the television, and it was hard to really understand, like you said, and really grasp the monumental things that were happening in front of me.
It was a scale issue as well. You don't realize the enormity of the size of the building, first of all, and the size of a commercial aircraft hitting it. It really looked like a small commercial plane, like a Cessna or something, in relationship to the size of the building, and go, some pilot miscalculated and made an error, in the beginning, and you had no idea the impact of that was a plane full of people hitting a building full of people, and the immediate loss of life, and then from a long-term basis, people that lost their lives over the next several hours.
Well, they do every year, and I think they do it in a bunch of cities around America. But in the city I live in, the local college, Pepperdine University, puts flags out on their lawn, and there's the thousands of flags every year representing each person who lost their life in the actual building collapse and the planes crashing into them. And it's a fitting tribute, and it's up for a month, so we drive by it all the time. And year after year, we stop, we walk through the flags, and we remember that. And I always want to say, in my mind, or however you pray, or if you pray, if you're one of these people that can just take a moment and look at it and say, the world changed that day for us here in the U.S., right?
Forever, no question.
There isn't a thing we do today that isn't directly related to what happened that day, whether it's in my world of mortgages and all of the incarnations of regulation and safety and security checks, but also in, just your regular, you want to fly, you want to buy anything, the checks upon you as a person, the government oversight, the actual spying on you. We call it spying, but of course, if you were, one of these people that was affected by that, and if you could have known about it through some spying, would you freely give up your particular freedoms of privacy to be able to catch the person if they in fact were caught through means that we call spying? I don't know. That's a tough one for me, but I always look to that day, that week, as to how it has changed how I live and how we all live.
Well, we talk about, George Orwell when he talked about the future. I mean, we're there and have gone far past that.
Yeah.
And when we read about George Orwell and Animal Farm and read about 1980, whatever it was.
1984, yeah.
Come and gone, right? I mean, to whatever extent we were, abhor what we had read about, I mean, we're far past anything that was in that book.
Yeah, not to...
Big Brother.
Well, that's true. And not to stray too far from the sentiment I'm trying to talk about, which is obviously remembering the people who were killed. Obviously, the, many, many thousands of people who were killed in the war since. And we're still in the Afghanistan war how many years later?
Yeah.
Still trying to figure out what that is. I read an article today about, the people who were the first responders who went to help people, and all the strange cancer sicknesses that have come out of breathing that foul, disgusting air in the day and the days in the aftermath of the building collapsing. It's, reverberations. And of course, we're stuck with Giuliani again. He was America's mayor, great hero, and now, of course, he's just the president's spokesperson on some of the most idiotic things that I've ever heard a person say come out of his mouth. But it's just that the reverberations, how it lingers, how it affects your life, thinking about that this week. And oddly enough, it obviously is 10 years after the recession, which was also grew out of the roots that had spawned that day after the 9/11 incident.
Just have to hope and pray that nothing like that ever happens again.
Well, here or anywhere.
Yeah.
I mean, I have a friend of mine, Randy Credico, and we've talked about him on the show, and he's quite the, he's not an anarchist, but he's certainly left-wing. He's left of Bernie Sanders. I mean, he's friends with Daniel Ortega, if anyone knows who that is. That's the president of Nicaragua. Anyway, he's good friends with Daniel Assange. Is that his name? Julian Assange. Sorry, not Daniel Assange. But he's one of these people that thinks that obviously, the government is too intrusive and corporations make too much money and things like that. And just talking about him and what happened and what has happened through the time period from 2001 till today, it's just interesting, the different walks of life and how people view that event. Obviously, the conspiracy theories that do exist have really died down, right? We don't hear about the government supposedly causing it, or I think they just blew it, missed the cues, or ignored the cues that could have saved thousands. And remembering those people, driving around and seeing those flags, really moving experience each and every year. I hope they don't stop doing it. And if there's a fund or something, I usually give to, those people in the first responders who, have lost their lives or continue to need medical expense. I just wanted to bring that up and give everybody, a little bit of a pause to reflect on that sort of incident that does happen, and it does happen all the time.
No question.
Okay. Hey, thanks, Daryl. Thanks for jumping in. I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. 888-713-2929. That's the telephone number. If you pick up the phone and give us a call, we can help you. We've been talking about mortgages, obviously, on the show for years. And the mortgage market right now, rates are up a little bit this week. Just want to get into it. If you'd like to email us info@malibufunding.net. I gave you the phone number. You can see our show on YouTube and our great affiliates. There's 3 of them, KCAA, KMET in the Inland Empire, San Bernardino, and Riverside counties. Want to thank those great folks out there for putting on the show for a number of years, and obviously the listeners who drive around in their cars on Saturday and Sunday and catch the show. Also up at K Tahoe, the great people up there who help us get that message out to those parts of Nevada and California that are reached through our tower up there. We are on some FM signals as well as AM signals, and if you are listening to us today, welcome to the show and thank you. The YouTube address, if you go to YouTube and look up Jeff Barton, that's my name, the real estate voice, you can see many of our shows, both the Las Vegas Real Estate Show and the Mortgage Voice, which you're listening to now. Getting back to the interest rates, 4.625 to 4.75% is a 30-year fix. Now, that has been hovering in that range for about, I would say, 6 to 8 weeks. And I think we're going to see at the next Fed Open Market Committee meeting the rates at the Fed level rising, which, of course, only affects your credit card, your car loan, some of the other short-term debt. But usually what we have is bank rates to shortly thereafter follow. So we would probably see by November 5% interest rates on 30-year fix. So if you're out there right now and you're looking to buy, I think it's a better time now than it's going to be at that time. The FHA VA loans, 4.25% to 4.5%, still terrific rates. I mean, let's figure on it. I mean, you're not getting 2.75% rates anymore, obviously. But at 4.25% to 4.5% an FHA loan, you add on top of that the mortgage insurance premium, the upfront fee, you're probably going to get an APR around about the same, 4.6 to 4.75% for a FHA or a VA loan. Now, understand that you're only putting 3.5% down, so that's a big benefit to you. The 15-year fixed are 4.125%, and the 5-year ARM is 3.75 to 4.25%. Now, these rates that I'm quoting you are averages. They're taken from a lot of different places around the country, and of course, they're good as opposed to not good today. I know that's for a fact. It's as I said earlier in an earlier segment, we were talking about the September 11th anniversary, and the 9/11 attacks, and how that changed a lot of what was happening in the mortgage industry. Certainly from that time, and what grew out of that time is that we had probably a over infusion of capital into the markets. This was after the time that we had the internet bubble burst back in 2000. Then we had 9/11 in 2001, and then we really upped the amount of money that was available for mortgages. And this was the time that Congress also passed some legislation to push the envelope of accepting certain types of loans. Freddie Mac and Fannie Mae were purchasing probably 80 to 85% of all loans, and with the expanded loans that were being offered in the marketplace really put at risk Fannie Mae and Freddie Mac, and we all know by 2006, 7, and 8 we had a real problem. 2008 was the mortgage crash, and since really 2001, 9/11, we have seen a really drastic change in what we do for mortgages, both in the I guess the amount of money available for mortgages has really been huge, but the ability of banks to lend has really changed dramatically. So because of 9/11, pumping money into the system to keep the economy going, that was of paramount importance at the time. I remember George W. Bush coming out and talking about going about your business, doing business. If you see something that looks suspicious, you call in on it. That was the philosophy. But in the business world, it was about making sure there was enough money available for the mortgage business. And at the time, 1 in 9 people worked in the mortgage industry, and it really fueled a refinance boom. I think rates came down. There was a lot of things that really affected what was happening in the entire economy. And of course, because that ball kept rolling downhill and everybody kept refinancing, taking money out of their house, and really overextending. There was that great movie that was out that talked about, I think that the example was there was a pole dancer from Florida who owned 7 houses, and she was, kept pulling money out of her house and investing in another house, and how this snowball effect of a bad loan over bad loan pushed by legislation, and also the free money given out by the Fed. That's Alan Greenspan's Fed. I don't think he gets enough blame for the recession that happened. However, it has changed the way we do mortgages. So we end up today in 2018 as a direct result of all of what happened through the early times from September 11th through the recession, obviously the crash, and now 10 years later. We're 10 years out from that event. And now we're probably looking at some of the same things that happened as a result of all that buildup of frustration from 9/11, but the free money that was available, and all of the people that were turning loans over, churning loans in the industry, we call it, to now in 2018, what have we got? If you're out there right now and you're thinking to yourself, look, I'm a self-employed person, and I have W-2s. No, I don't have W-2s. I have bank statements. I have 1-year bank statements. I might have 10 to 15, maybe 20% to put down on a loan. These loans used to be called subprime loans, and that's a word that we don't hear a lot of. They're called non-QM loans now. The great difference, and whether this makes it better now than it was then, the great difference today versus then is you don't have Freddie Mac and Fannie Mae and Ginnie Mae, i.e. the buyers of conventional FHA, VA loans. You don't have those people buying non-QM loans, or in the vernacular of the day, you don't have them buying subprime loans. These type of loans are all in the private sector, and they are hedge funds, they're insurance funds, they're sovereign funds, they're private equity firms buying these loans. Now, the delinquency rate is terrific. Let's face it. Even in the subprime world today, you are having delinquency rates below 2%, maybe 1.5%, which is spectacular, really. I mean, I think if you look historically at what's going on, what has been going on in delinquency rates across the board beyond, or before 2008 through probably 2010, you're probably looking at anywhere from 2 to 3% delinquency rates on an annual basis. Well, we're below that now, even for what was considered subprime, but what is now called non-QM. You also have a safety factor built in, the fact that the government entities, GSEs they call them, government-sponsored entities, which, by the way, when you really think about it, they're government-owned. Ever since they got bailed out to the tune, I think it was $165 billion back in 2008, to keep Freddie and Fannie alive. We were supposed to get all kinds of mortgage reform, meaning that Freddie and Fannie were supposed to wind down, and we were supposed to develop this other marketplace for these types of loans. Well, it never really happened. And there's an article out in today's Mortgage News Daily that talks about how Freddie and Fannie, because they sweep all the profits every quarter from Fannie and Freddie right into the Treasury, that was part of the deal of the bailout, are really cash cows for the Treasury, and that there's never going to be a time where the Treasury is going to want to give up a profit-making center like that. I mean, you think about it yourself, would you? But should government be in any kind of loan? And again, this is all an outpouring since the crash in 2008. This is an outcome of government intervening in the sector of Fannie and Freddie and Ginnie, and this is all a direct result of what happened with the infusion of money since 9/11. Anyway, this is a day for reflection, but also a little bit of looking forward. We'll try to get into it a little bit later in the show. I'm Jeff Barton, your voice in the mortgage industry. Thanks for listening to the show, and we'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. 888-713-2929. That's our telephone number. If you pick up the phone and give us a call, we can talk to you about your mortgage. Maybe you're one of these people who still has yet to figure out refinance was probably a good idea 3 years ago, but you have an interest rate that's above 6%. If that's true, or maybe you've got something like an interest-only loan that's coming due, or you've got an ARM product that's about ready to adjust, you really need to get some kind of a valuation and an evaluation about what your situation is and how we might be able to help you. And if you don't want to actually use one of my terrific loan officers, we can recommend some. Well, this is a show about trying to give you some information. The information that we give you is valuable, and if you look at it as a resource, I think you'll keep coming back to the show. KCAA, KMET, and K-Tahoe are the three great affiliates we have, and I really appreciate them each and every week delivering a great signal through AM/FM signals across a wide swath of San Bernardino and Riverside and up in Northern California and Nevada. Again, thank you very much for listening to the show. We do bring to the show great people. Jennifer Conrad is one of those terrific people. She's a loan officer and does a lot of processing, and we wanted to talk a little bit about foreign nationals today. Jennifer, how are you?
I'm doing great, Jeff. Thank you.
Yeah? What's happening in your life? I know you're busy. I know you're doing a lot of different kinds of stuff. Give us a little recap.
I'm busy with my 14-year-old now.
Great.
I just had a birthday, and we just started high school. But,
great.
Yeah, I've been, busy with actually processing a lot of foreign national deals. It seems to be an influx of people who are wanting to purchase, especially in the Florida area for some of the foreign national deals.
Okay, so give us an idea of what that would entail. Is it, obviously if someone is when you say foreign nationals, you mean non-U.S. citizen, right?
Right, they're non-U.S. citizen. They don't have a green card. They more than likely don't have a Social Security number. However, they can be a foreign national and have a Social Security number as well.
Of course.
And they're wanting to purchase in the U.S., whether it be for investment purposes or for a second home. And so then we can do a loan for them, and our full document type program really is just a letter from their CPA stating that they're in good standing, or if they are working for someone, a letter from their employer stating that they're in good standing with their job, and a reference letter from a bank from their home country that lets us know how much, as far as they have in assets, and that they're in good standing with the bank.
Okay, and in terms of lenders that do that, this would be what they call a non-QM product?
It is a non-QM product. The thing about it, though, it's still considered a loan that's certain lenders consider it, we call it a TRID loan. Some are non-TRID loans.
I see.
So in some cases, we're doing HUDs. In some cases, we're not. Yeah.
I see. Very good. And Florida, ripe for that, because obviously you have a lot of people from South and Central America who come to Florida to invest, right?
Yeah, but we're actually starting to get some people, wanting to in Texas, and I personally am going to be trying to promote the opportunity for people to be able to do it here in California as well.
Well, that sounds really as an interesting product. How do people actually find out about these products? I know we in the business know about it, and obviously people who are, foreign nationals are looking for a way by which they can either invest in the U.S. or buy some kind of property here. How do people, find out about them other than, I guess, it's surfing online?
Probably the best thing is going to be to contact, a real estate agent and ask them, do they have a loan officer or a mortgage company that specializes in that type of program, because
right.
it is so detailed in the fact that it's not just something that's real simple. I tried to, recap it in the simplest forms, but it has so many different layers based upon the lender, based upon, the situation. We have borrowers who are doing foreign national loans who actually have what we call an E2 visa,
right?
Which means that they are here basically for the purpose of managing property. So they're buying investment property and they're managing it, and so they have a visa to be able to be here and do that, and that allows them to be able to purchase a home almost in a traditional sense under a conventional loan as well.
Now you, obviously you're a mom, taking care of your son, and you're also a full-time professional in the lending business. Stresses this time of year go up, go down. What do you like better? Do you like working and having your son in school, or do you like him home for summer?
No, actually, I think I like it better when he's in school because
me too.
If he's home during the summer, I do want to spend time with him.
Sure.
But then the other thing is, my attention is obviously split between being there for him and then also with work. But at least once he's in school, I can just pretty much focus on work, and so I'm able to delve into it a little bit more. But it's funny because now that we're kind of past the holidays and everything, then things start to slow down. So it's like, we're a lot busier during the summer. People are wanting to look for property a little bit more so, even in the summer than in the winter. So.
Now, in Florida, when you're handling these type of loans, property down there, is it cheaper? Is it more expensive? Obviously, anybody who lives in Southern California the property here is really expensive. Even in San Bernardino, Riverside, I say even, but yeah, there are sections of that of those two counties that are really expensive. And so Florida, cheaper, better?
I think it's relative because, we have some property. On average, the home prices that we do as far as like conventional loans I'm running would be somewhere between like $200,000 and maybe $400,000. But I do find that with the foreign national deals, they're looking for property that's a lot more expensive.
I see.
So, we just did a loan not too long ago. It was like an $805,000 purchase on a single family. And even a lot of the condos, like right now, I have 3 condo hotels going. Excuse me, and the average on those is running about $400,000. And of course, these people are using this strictly for investment. People are coming to Florida like to go to Disneyland or whatever, and they don't want to stay in a typical hotel, and they want to stay in something similar to an Airbnb. So all of these people who are purchasing these properties have signed a lease with the developer to be able to do that for the next 2 years, so that their properties are strictly going to be for the purpose of using that as an Airbnb. And these properties, like I said, they're running starting range about $400,000, not including the assessments.
That's a pretty good deal. Now, the condo, they call them condotels, don't they?
Right, condotels. Mm-hmm.
Yeah, and basically you invest in them, you buy them, and then you rent them out, and that becomes your income.
Right, and this particular one that we are working on, like 3 of them for this one division, they're offering such a great return to the buyers that people really couldn't pass upon it. They already can anticipate what type of money and profit the owners are looking to get, and it has about 600 units in the complex, and they're not fully developed yet, but they're over halfway sold. Yeah.
Where is that? Up in Orlando or?
In Orlando.
Oh yeah, that's
most of them seem to be Orlando, Winter Garden, Kissimmee, that area.
Right, and that's where obviously Disneyland is, and there's a lot of vacations. A lot of people go up there to spend time, a lot of time actually. Yeah. Okay, the stresses in the business. How do they affect you in your everyday life? And I say stresses because we know, and we were talking off air about just a client that we're trying to help, and the stress from the client is that he was put into a situation where he probably shouldn't have been put in, and we're in a situation where we're trying to help the guy, but it's very difficult to get him there. Being able to talk to the guy about that while he's trying to fix his current situation is in itself stressful. But you compound that with, several deals that you're dealing with at the same time, from opening up 1003 to closing documents. Yeah. How are you dealing with the stresses?
yoga, working out at the gym. But yeah, I would say definitely there's some stress involved because it does feel like, in some cases we feel like lenders are accepting a lot more deals, but there is sort of been an experience where, if it's one of these interesting loans that, they wait until the last minute and then say, we are running into an issue with like a condo questionnaire, or, the appraisal is not acceptable, though the appraisal was ordered through them, and so now they're wanting additional comps, things that, are almost impossible to get in order to support it. And so you're having to backtrack, start over, submit to another lender. So in that case, it's a lot of stress, especially when you're anticipating the loan getting done, and then you find out, basically you have to start over, or, in the end, there's no deal there. So, in that case, it's rough, but it is part of the business, and there's always been a situation where, there's a curve of, like, you'll have an influx of things that, loans that are a little bit easier to go through, and then you have some, that are a little bit more challenging. So,
Hey, Jennifer, we're up against the clock. Could you shout out your phone number for me?
Sure. My number
That'd be great.
is 773-593-6831.
Jennifer Conrad, terrific loan officer and processor who has really got experience. For anybody who's out there looking for someone, please give her a call. Jennifer, thanks very much for being on the show once again.
Thank you, Jeff.
Thank you, too. And I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. 888-713-2929. That's our telephone number. If you pick up the phone, yes, we can talk about your mortgage, and we want to be able to help you. There are people out there who still have not refinanced. I know that sounds ridiculous, but rates are still low enough that you can take advantage of it, and you really probably need a mortgage, somebody to look at it and tell you whether they can help you. Maybe you have an FHA loan you've been sitting on trying to get rid of that mortgage insurance premium that you're paying every month, and that would lower your payment. We certainly can look at that. I know that there are purchases out there that people are trying to do. There's all kinds of ways to do purchases, whether it's VA, FHA, or whether it's just a conventional loan. There's also great non-QM products. So if you're out there and you've got an issue, I want you to give us a call, or at least write down the number and call me after the show airs so that you can ask me a question and get one of our terrific loan officers to help you with that process. One of those terrific loan officers is here with us once again, is Rick Guerra. Rick, how are you?
Hi, Jeff. I'm good, thank you.
Okay.
Thanks for having me on.
And thank you very much. Now, I brought Rick on the show today because Rick is a master at handling not easy files, but also he's great at handling some difficult situations and trying to get the most out of, the submission from the lender. I'll let him tell a little bit of a story about what's been going on with him, especially when we're trying to close some difficult files. Give us a little example of that, will you, Rick?
Sure, Jeff. We always experience difficult files. As a matter of fact, it's best said there is no easy file.
Right.
Some of the experiences, that I've had recently, for example, is a clear title. Taking a look at your title and making sure that any liens that are on your title don't get sticky at the end. And then, of course, as always, just having your documentation, in order. Recently, I had a credit check, an alert where the Social Security number was transposed, and making sure that these items are correct. They will get caught in the system, and some of these will cause problems at the end.
Now, you recently had, and I bring this up just because I was involved a little bit with it, you had some issues on some insurance, right? That there was an issue with how the insurance policy read, and the lender didn't want to read the whole policy and kind of held up the little deal a little bit. How did you work through that problem?
Thanks for bringing that up.
Sorry, I know it's a painful memory, but you closed the deal.
but it's true. And terminology. This is a part of the segment that I wanted to talk about, and it's building partners and having good partners.
Right.
With good partners communication, it was unbelievable. But condominium insurance and the various acronyms that are used with insurance that are specific to a property, in this case an HO6. Well, yes, as a matter of fact, this lender didn't like the fact that it was an even more spelled out terminology, condominium owners insurance, and wanted HO6 on that document. And as you know, as loan officers and processors, we're at the mercy of the lender. So when
Right.
they say they want it, we got to get it.
Right, exactly. And the fix of it is going back and forth and back and forth. And I think that the beauty of a guy like you and good loan officers is not to drag the client up and down, but to solve situations by going back and forth and really going to battle for the client's needs.
Correct. This is the best example of getting your hands dirty.
Right.
And at no point are you really wishing for your client to know that, this ongoing conversation that to anybody would be ludicrous.
Right.
You wouldn't think this actually takes place in the modern world, but it does. And yes, you've actually got to mitigate to the best of your ability, these communication problems that you're having, whether it's with the insurance company and then, of course, with the lender. Yes, in this case, we provided the lender a 55-page document that gave specifics
Right.
of the policy and the insurance, and that solved our problem.
Right, and there's no way anyone read that 55-page document. You just had to prove to them that here it is. You want to read it, there it is. But I'm telling you what I'm telling you, and it has nothing to do with what the condition on the loan is.
Yes, correct. And in this case, and for all loan officers listening, the terminology that is needed is walls in. It's condominium walls in.
Right.
Insurance. That's what the lender needs to see.
Okay, so for those of you out there thinking, walls in, what is he talking about? A condominium is really, you are owning the space paint to paint. So that's basically what walls in is, right? It's not what's inside the wall. It's what's from the paint to the paint in the interior. That's the space that you're owning. Right?
It's correct, and and we get that granular. That's
Right.
how granular our business gets, and we want to shield our client from having to experience that granular information.
Right, because really all it does is make someone insane. I mean, it's like as if my wife had some fraud on her account the other day, and she called up the vendor who had, the person, whoever was doing the fraud, use that information that was my wife's at their store. And it was amazing, the information they were asking. They were getting into stuff that had nothing to do with the fraud just because that's what they needed for their particular insurance carrier. It made you nuts. So you don't want to drag your client through that in any loan deal because they're anxious either about doing the refi, getting the cash out, or getting the home purchased.
Correct. And oftentimes this has taken place at the closing of a loan,
Right.
Where there's anticipation, and you want to deliver the great news of welcoming somebody to their home. So,
Right.
So correct. You want to shield your client from this this granular information.
Okay, how's the market doing right now, and how's your business?
Well, it's surprising. It's actually doing great. As you said in your opening, there's great opportunity for refinances. If you asked me at the beginning of the year, interest rates would be much higher than they are right now.
Right.
And that's not what we're seeing. We're seeing, yes, a gradual increase, but gradual being the word there. And then, of course, the news. We are hearing that the interest rates are going to continue to rise, which is expected. We live in a speculative market. We look at this, and certainly what I recommend is don't look into your crystal ball. Interest rates are strong. Refi opportunities are there, and if you look at other consumer, interest rates on consumer debt, you're always going to find your best rate in a mortgage.
When you look for clients, Do you look for similarities? Do you look to help solve problems? Do you look, obviously anything that walks in the door, you're bound to take a look at it. But what's your favorite client to work with? Somebody who's got kids, a retired couple? And the reason I ask that is because, everybody's got a soft spot in their heart for somebody, and it's not everybody. But when you're looking at clients, what are you looking at?
Well, yeah, I have to admit that you're always looking for a gratification, something that makes you feel good. And, my memories of the most feel-good stories always are with a family. Of course, we always want to be able to be helpful, but when you're able to help young children, a family with small children, and know that you're helping with their future, that is where I find the most gratification. And so, it would lie there.
Yeah, no, and I know you're a dad and you've got a son, and so that's kind of why I brought it up, because I think when you can look at your situation and see somebody else's situation, and you have that feeling that, hey, you know what, I know what they're going through. I know what that is. I'd like to help them the best it is. Yeah, I get the same feeling. I have children, as you know, and I've been married a long time, and I get that feeling. Not that anybody else is less empathetic or I'm less empathetic too, but I really identify with those type of people, first-time home buyers, people that want to get into a situation where they own rather than rent. Yeah, those are the kind of people I'd love to help too.
Absolutely, and we have good reason to be optimistic because we're seeing so much flexibility in the mortgage market.
Right. No, there is, and we had in an earlier segment someone talking about foreign nationals. We've got non-QM. Certainly the rates are good enough, and anybody that can, obviously has a job and has the ability to repay, we could probably help. Rick, thanks very much for coming on the show. Why don't you shout out your phone number, if you would, for me?
Absolutely, Jeff. My phone number is 818-326-6206, and I'd like to also give a shout-out to our neighbors in Northern California that are affected by the wildfires, and to our fellow Americans on the East Coast that are bracing for Hurricane Florence.
Yep, all that, and we're going to talk about that next week as well. I really appreciate it. Thanks, Rick, for coming on the show.
Thank you, Jeff.
And thank you very much. And I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For questions or comments, send emails to info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. 888-713-2929. That's the telephone number. Pick up the phone, give us a call, and we can talk to you or help you with your mortgage. There's a lot of real estate questions you might probably need answered, but the main one is, can you afford the property you want to buy? Or if you want to take money out of your house, how much money can I get out of my house? This all has to do with talking to a terrific professional, whether it's with Malibu Funding, who, by the way, thank you very much. They sponsor the show each and every week. Their NMLS number is 79620, and with that number, obviously they can do loans, they broker loans, or they are a direct lender. Either way, they can help you decide whether you can take money out of your house, whether you can afford a particular loan, all the things you're going to need in order to be able to decide what you want to do with your mortgage. Again, if you are out there and you wanted to reach us by email, info@malibufunding.net is our email address. We have a Twitter handle. It's at Jeff6493. And by the way, Daryl, do you tweet at all?
At the beginning of the year, I was doing it. I have an account, and whenever I tweet, it goes automatically to my Facebook.
Right.
And my New Year's resolution was I was going to tweet every day.
Okay.
And I did it for about 6 weeks, and then it fell by the wayside. But I should go back to it because I think it's important.
Well, it's interesting because you're one of the most informed radio people that I know. Not only have you been in radio for most of your adult life, but you have your own show. And Knuckleheads is a terrific show, and you might want to tell the people about it a little bit, if you would.
Well, it's a live show. We take requests. We have no idea what we're going to do usually when we walk in, and we play what we want and say what we want. We've been doing it for 18 years.
It's really terrific. I mean, that kind of longevity in broadcast as well as behind the scenes. I know you ran a couple radio stations in the Los Angeles area for a while.
Yeah, KROQ being the probably the one that turned out to be the most successful after I left.
Well, I mean you were.
They had to have a base to go from.
That's right, exactly. Yeah. So in knowing that about not only radio and what we try to do with this show, where do you think radio is headed? And I ask you that just simply because I think what we try to do and inform the public and AM talk radio, but radio in general is one of those mediums that seems to change all the time. So what are your thoughts about it and how and where it's going?
Well, the death of radio has been forecast for 30 years.
Right.
First, regular black and white television was supposed to kill it, color television,
right.
Cable television, MTV, video killed the radio star, right? I mean, that was the Buggles back when MTV started.
Right.
But as long as compelling content is being produced, as long as people go on the air in some way, shape, or form and do storytelling and inform people, and it's entertaining, and you have a beginning, a middle, and an end, and it doesn't matter whether it's a Dixie cup with a pair of strings in between. People will listen, whether it's AM, FM, whether it's satellite, whether it's no matter where they have to go to get it.
Yeah.
The medium used to get from one person to the other is not as important as the content itself.
Well, I think that's all very true. I've seen a real growth in podcasting over the last 3 or 4 months, more so than I had seen in the previous 5 years. I don't know, they sort of disappeared for a while. I think we might have talked about it. But the podcast itself, which is basically this radio show if you were able to download it from a website, that's really all it is. And that's as much radio on the internet or however you get it delivered as anything else.
Well, I mean, the barrier to entry has been
really reduced.
If you have a laptop computer and you can buy a $60 USB mic, all of a sudden you're a broadcaster. Whether it be a podcast, whether it be some sort of streaming audio.
Right.
I mean, it used to be in order to do what we do, you either had to be hired by a radio station, you had to buy radio time, or you had to buy the station itself.
Right, and then put yourself on the air. Right.
Those were the only choices.
The only problem with that, as a lot of industry, is when there's a great expansion of the amount of people that can do it for free. Obviously, they're doing it for free. So getting paid to do this type of work, either in your profession as a behind-the-scenes station manager or on-air personality, it's just really tough to make a living in radio.
Well, it used to be that most radio stations were programmed by the program director, and they sold 30 or 60-second spot advertising in between. At this point, even in Los Angeles, if you have enough money, you can go to that radio station and you can buy a block of time, whether it be 10 minutes, 15 minutes, half an hour, or 3 hours, and you can do it in the middle of the day, whether it be Sunday, Saturday, during the day, whatever the case may be. If you have compelling content and a checkbook, right? They will turn you over to the sales guy, you work something out, and all of a sudden you are the program director of that radio station for whatever time you can afford. And that was not the case 20, 30, 40 years ago.
No, because the cost was prohibitive.
And the fact that they didn't sell
time. They didn't need to.
Right.
They could sell advertising and make more money than someone who was going to give them even $1,000 an hour.
Today, not so much.
Not so much, no, and I think that's true. Okay, thanks for jumping in there, Daryl. I wanted to talk a couple things going on. Obviously, in our last segment, or one of the segments earlier, Rick Guerra was talking about a hurricane happening on the East Coast and the devastation that goes along with that. So I thought I printed out an article. If you're in a situation where there's a disaster that happens, what do you do? So there's this website that I take a lot of information on, and it had information about Florence. And so one of the questions they ask is, what should I do first? And there's the Federal Emergency Management Agency. Let's say that you're about ready to purchase a home, and you're in contract, and you're 2/3 of the way, 3/4 of the way, or maybe you even have your clear to close, and a disaster happens. California, fires, right? Fires. We've got floods. We've got mudslides. Certainly on the East Coast, they're dealing with hurricanes through hurricane season, and these things happen all the time. So what happens? What should I do first is the question here in the article, and they talk about contacting FEMA. right? The Federal Emergency Management Agency, and you have to, I guess, register online with them. So I don't know whether that's a pre-disaster registration or you register once something has happened. Then they get into some very specific questions. I can't pay my mortgage. Let's say you're in this position, right, where a disaster has happened, you've lost your job, or how to get to work is impossible for a month and you're not going to get paid. I can't pay my mortgage, so what are your options? One of the options out there for you, if you're in this position, is a thing called forbearance. What that really means is you can postpone your payment of your mortgage, right? Let's say you need 2-3 weeks, a month, because right now the roads are closed and you can't get to work, or half your house is blown down and you need obviously to spend that time to try to fix your home, or for any number of reasons you just can't pay the mortgage because of the disaster. The forbearance, this is something you need to contact your lender about. And I know a lot of this is, you doing the work. It is not easy and it's not fun, but you're not alone, and there are some avenues that you can explore. The forbearance simply means that you can postpone the payment of the loan for a certain given period. The interest on that loan will continue to accrue, but if you get a forbearance acceptance by your lender, you will be able to not, have dings against your credit, and you will not have late payments and other things that can accrue as a result. This is something that is workable with your lender, and many states have legislation that has been passed since the disaster of 2008, the mortgage crash, that allows borrowers to be able to, and really compels the borrower to negotiate with you in situations, whether it be a disaster or a foreclosure. So that's something to think about. A couple other questions quickly to get to. The house was destroyed. Should I keep paying the mortgage? Yeah, unfortunately, the answer to that, according to this article, is yes. If you don't have a house, it's been wiped out, you still have that obligation. Now, obviously, this is a personal choice that you have to make, and if you have an attorney or someone that can look at this situation and see whether it's better for you just to walk, or it's better for you to continue to pay your mortgage while you're looking to rebuild your house through your insurance, but that is an option, and they say that paying your mortgage off will keep your credit good. Obviously it will, because you're paying the mortgage. And then one last one, what happens if I stop paying the mortgage without telling my servicer? Well, all the bad things start happening then. You get foreclosure letters, you get dings to your credit, you get notifications, you get harassments. So these are things, as I said, that you must talk about. If I lost my house, would I pay my mortgage? I don't know. I'd have to think about that one long and strong. I mean, if I don't have anything to pay, and, I'm not saying it's advice I'm giving. I'm just saying if it happened to me, that would be something I would absolutely look at. Anyway, Daryl, thanks for jumping in. I do appreciate that.
Pleasure.
Okay, and I'm Jeff Barton, your voice in the mortgage industry, and we'll see you next time. Thanks for listening to the show.
You're listening to The Mortgage Voice with Jeff Barton. For more on today's topic, visit www.malibufunding.net.